Hi, welcome to Wealth Spikes, Empowering Trading and Investments. Today, we are here with you with yet another interesting topic. This is about mutual funds. We get so many queries regarding mutual funds. How do I invest in good funds? How do I identify good funds? And many more queries I can add. So we thought we'll come out with the Beginner's Guide for Mutual Funds, SIP Strategies. That is the topic for today. It will be very interesting for you to invest in good funds. This will be a good guide for you. Apart from that, this will also be useful for your friends and relatives and your network. So please do like, comment, share and subscribe. You can share it with the friends and network. This will be very helpful for them as well. We do all our updates regarding trading and investments in our Facebook page. The link is given below. Please do join our Facebook page to get all up-to-date updates regarding trading and investments. Now we'll go into the subject, Beginner's Guide for Mutual Fund SIP Strategies. The most common mistakes done by beginners while investing in mutual funds. Let us see one by one. What are the common mistakes? The first and foremost mistake is investing directly in mutual funds. They don't have any clue of mutual funds. They don't know how to identify a good mutual fund suiting their requirement. Without knowing any of the basic parameters about mutual funds, they invest directly in mutual funds without any help. This is a very big blunder people normally do. Please don't do this. Please take the help of a certified finance professional or a qualified personal finance professional who will be in a position to guide you with the right kind of funds suiting your profile. This is the first mistake. Because if you are well versed in mutual funds, that is, if you know how to identify a mutual fund, if you know how to track a mutual fund, if you know how to see the returns from a mutual fund, if you know how to switch over from one fund to another fund at the right time, if you know all this, you can now directly invest in mutual funds. But we see very few people who know about all these factors. So it is ideal for you to take a professional help. That's our suggestion. Next point is investing without a financial goal. For example, if I have a financial goal within 3 years time, I'll go for a debt fund or any other fund like a debt fund. Similarly, if I have a financial goal after 10 years time, I'll go for a fund which is having more exposure towards equity or something like that. So based on my financial goal, my fund will also vary. According to the financial goal, you should be in a position to invest. I've seen people telling me that no, I want to save some money, so I have invested in some mutual funds. And I've not seen many of them very happy because it is not helping them to meet their financial goal. You should not take mutual fund as a saving tool. You should actually take mutual fund as a saving tool to meet your financial goal. That's the right way to go about it. Number 3, investing in mutual funds without evaluating them. They see some paper ad or they see some online ad or they say that no, someone has no recommended this fund, or they go to the bank and the bank person no recommended them this fund. They think that no, the banker has evaluated the fund and he has no suggested. A banker is only a channel of distribution for the fund house. Very simple. By going through these channels, they invest in wrong kind of funds without evaluating the fund. So ideally the best way should be, you should be in a position to evaluate the fund and invest accordingly. You would have seen the fiasco of Franklin Templeton. Many of them now invested without evaluating it, and we were able to suggest our customers at the right time to exit. So none of our customers had any issue with Franklin Templeton because they were able to get an early exit based on our advice. Investing in mutual funds without evaluating them is also a very big mistake, normally done by people who invest directly. After that, investing in mutual funds without seeing the compatibility. Let me tell you one thing very clearly. Not all funds are there for everyone. Certain funds will suit certain people, not all funds. So, based on your risk profile, based on your risk appetite, which we can see based on your financial statement, accordingly we will suggest you the right kind of fund which will suit you. You should invest in a fund which is compatible to you. Next point is, what is the solution for this? If you ask me, solution comes next. Go for SIP. Go for a systematic investment plan. That is the best way to go about it if you want to go in a mutual fund investment. We have just taken one example and we have now shown here. See the kind of returns. SIP returns invested, hardly they have invested 10,000 in an SIP every month. One small example of one fund we have taken here. Since inception date, since October 8, 1995, it has given a return of 22.87%. Another example, it has given an inception. The date is since 2005. it is giving a return of 15.33%. Another example, since 2007, it is giving a return of 13.90%. Another one, it is giving 24.55% since 2010. Another one, 2003, since 2003, it is giving 16.86%. Another example, 2004, it is giving 20.20% example. A fantastic, good performing fund. Please tell me, in which other financial instrument you will be getting this kind of returns? In no other financial instrument you will be getting it. What is the best way to go about it? That's what we have shown here. It's called as GAP, Goal Achievement Program through Mutual Fund SIPs. In the slide you can see the father wants to invest 10,000 rupees per month for his retirement. The daughter wants to invest 5,000 rupees per month for her education. The son wants to invest now 5,000 rupees for his education. So the mom wants 10,000 rupees per month for my kid's marriage. So we have shown the family's requirement as such. Based on the goal that you have, you can invest accordingly. That's what we are trying to tell you here. For the whole family, it is sensible to save money for family's financial goals and keep them financially secure. In no other way of investment, you will get this security. The negative effects of no inflation will hardly leave us with anything in the end if we choose to save money in bank deposits. In banks, you get hardly 5% returns, and with the inflation also of 7 to 8%, finally you get only minus 2 or 3% as returns. Any other saving instrument that offers very less returns, while an investment with good returns will keep us financially secure. Mutual fund is only available opportunity currently in the market for you. By investing in our savings in the right asset class for long term, we can ensure financial security for the future of your family. Any family future financial requirement can be taken care of with good SIPs and good mutual funds. That is a message for us here. Reap the benefit of compounding through SIPs. We'll see that in detail. What is the biggest problem that we have? Inflation. The biggest hurdle in your financial goal achievement is inflation. For example, in 1990, in the slide you can see gold, which is now costing 3,200. In 2021, it is costing you 48,000. Actual inflation is 9.1%. Similarly, in petrol, it is 7.8%. In diesel, it is 10.7%. In milk, it is 8%. As per RBI estimates, WPI inflation has grown by 6.5% in the last 31 years. 6.5 is only average. We are able to see now in gold, in petrol, in diesel, and in milk, it is on the higher side. So, how inflation is eating your money, you can see here on the right hand side. What you bought in the year was able to give you 1 lakh worth returns. In the year 2021, it is able to give the returns of only 10,500. Reduced value of money at the rate of 7% inflation per annum. That's what you can see here. Inflation is a major killer in our savings. That's a message for us. Inflation, household expense. 2005, it was costing 15,000. In 2015, it is costing 25,000. In 2025, it will be costing you 54,000. Similarly, for higher education, 2005, it was costing 3.16 lakhs. 2015, it was 14.45 lakhs. In 2025, it will be costing you 32 lakhs. Similarly, marriage cost, 2005, it was only 4 to 5 lakhs. In 2025, it will be costing you 22 to 26 lakhs. Below, we have shown you cost in the year 2025, assuming only 8% inflation per annum on 2015 prices. We have shown you only a very, very conservative estimate. But actually, inflation we have already seen in the earlier slide, it is more. What is the right way to go about it? Simple, smart, time-tested formula to achieve your goals. Start early, invest in the right asset class. We will guide you in what kind of asset class you need to invest, because we are a group of qualified personal finance professionals. Invest in the right asset class with our guidance. Save regularly. With this, you can achieve your goal. That's what is this GAP all about. Here you need to start early. In the next slide we have shown you, give time to your investment rather than timing and benefit from the power of compounding. Two examples we have shown here. Mr. Gupta on the left hand side, Mr. Saxena on the right hand side. Mr. Gupta starts early, investment starting age 25 years, whereas Saxena is starting at the age of 45 years. So Mr. Gupta is investing 10,000, Saxena is investing 20,000. And the returns what they are getting finally, wealth at the age of 60, Mr. Gupta is getting 11 crore 41 lakhs. Whereas Mr. Saxena is getting only 1.23 crores. That is the difference. So start early, you get the compounding effect. That's the beauty here. The above example is merely an illustration to explain the benefit of investing at an early age. Returns are assumed at the rate of 15% CAGR. The Sensex as an average is now growing at the rate of 15 to 16% for the past so many years. That we'll see subsequently. There are so many asset classes, in which people try to invest. On the left hand side, you can see the actual gain in different asset classes. Gold, silver, bank, or deposits, or Sensex. Sensex is offering you the highest return. The long red bar on the left hand side, you can see it is giving you 14.53%, whereas gold is giving you only 8.75%, silver only 7.92%, bank deposit only 8.24%, and company deposit only 9.21%. So again, Sensex wins. On the right hand side, you can see growth of rupees 1,000 in different asset classes. Only in Sensex, it has grown up to 2 crore 27 lakhs 409 rupees. So on all parameters, you see mutual fund is the best for you. Equity mutual funds over a long-term horizon offer better risk-return payoff ratio. Plus, it gives you liquidity. You can encash your mutual funds at any time, whenever you want. Liquidity, transparency, and convenience. These are the advantages. What you should do, you should invest regularly. That's the most important aspect. Why should you invest regularly? You can ask me. Every investor dreams of buying at a low price and selling at a higher price, but this doesn't happen at all. How does one know whether any given time is the right time to buy or sell? We will not be able to evaluate. Very difficult. Many retail investors try to judge the market movements and end up losing their money in the long term. Most of the retail investors lose money. You might have seen. A more successful strategy is Rupee cost averaging. This is what we told you about investing consistently, wherein you invest a fixed amount regularly. Thus, you purchase more when the prices are low and purchase less when the prices are high. That's the beauty of SIP. SIP investments takes advantage of this strategy. On the right hand side, you can see rising market, up market, units are low. In a falling market, down market, units are more. You can see the symbol on the right hand side, symbols rather. Timing is very important. Market timing does not matter over the long term. Here we have shown you 3 bars. Fixed investment at a highest Sensex value every year. It gives you 12.13%. Fixed investment at the lowest Sensex value every year. It gives you 14.17%. It is practically impossible for a person to track both. So ideal way to go about it is systematic investment. On 1st of every month, it will give you consistent 13.20%. Sensex returns every year. From 1979 to 2021, Sensex has now given a return of 16% average the past 42 years. From 1 lakh investment in 1979, it has gone up to 5 crore 24 lakhs 83,000. Name one asset class which can give you this kind of returns. Only mutual funds can give. How it is giving? The power of compounding. Did you know at the rate of 15% compounding, what will be the value of rupee 1? After 5 years, it will be 2. But after 30 years, it will be 64 rupees. That is the power of compounding. Thanks to Albert Einstein on the left hand side shown. Systematic investment plan is a tool that allows you to invest mutual funds through small periodic investments. SIP helps you to set aside a fixed amount every month for investments, thus contributing towards your goals. For investment purpose, we often wait to collect a large amount of money and investment all at once. Through SIP, you can start with smaller amount on a monthly basis and create wealth over a long term. That's the beauty of SIP. Let us see what are the benefits of SIP. Imparts financial discipline to your life. Invest irrespective of market conditions. Cost averaging helps neutralize market volatility. Get benefit of power of compounding. This is the advantage that you get. Each drop of water is essential to make a mighty ocean. That is a basic mantra of SIP. SIP performance we have shown here. 15 years performance returns 25,000 invested every month. That's an example shown. In average of all the mutual fund schemes, the CAGR is 16.4%. Okay, the current value is 1 crore 73 lakhs 88,000. The same amount if you are invested directly in Sensex, you would have got only 13.2%. You would have got only 1 crore 32 lakhs 33,000. Don't you think that mutual funds are a better tool for you to get better returns from the market? 25,000 per month invested, 45 lakhs, current value is 1.74 crores. What more do you want? We will show you a fantastic platform which is very easy for you, where you can purchase as per your requirement. You can switch funds. We will suggest you as per our guidance you can do. You can redeem, you can do SIP, everything you can do as per your requirement. We are there to guide you. benefits of doing SIP for a long term. For example, if you're doing 5,000 rupees per month for 20 years, it can give you a 15% CAGR. It will give you 66 lakhs returns. If you are doing a 10,000 rupees per month SIP for 20 years, if it can give you 15% CAGR, you'll be getting 1.32 crores. You can see the other CAGR percentage of returns also given. Thanks a lot for staying back. This is an important message for you. So please do your SIP immediately. We are here to guide you on that. If you want to start your SIP journey with us, you are most welcome. You can now click on the link given below in the description and you can open up a mutual fund account with us. We are here to guide you, to suggest you the right kind of funds suiting your profile, suiting your financial goal, suiting your risk appetite. Thank you so much for staying back. Bye-bye.